Welcome to the 10 Minute Treasurer. My name is Jeff Pospisil, and if you follow me regularly, you're going to notice that I shaved. This has nothing to do with this video, but just to let you know, it's hot here and humid, and I wanted to feel a little bit cooler, so I shaved. Anyway, but what we are going to look at is, what about the issue where you are paying an expense, health insurance in this case, health insurance ahead of time, but then there's subsequent payroll withholdings for the pastor's share or the employee's share of that health insurance. So how do you account for that? So you're paying for the health insurance it's June right now, but the withholdings for the pastor's share isn't going to come until July. How do you account for that? And I'm going to show you 3 different methods. I'm not going to show you in QuickBooks, but I am going to hopefully explain it well enough that you can apply it to your QuickBooks. So what I want to do is I want to show you 3 different ways of possibly handling this issue where we are paying the health insurance ahead in the month prior, but then we have subsequent payroll withholdings from the pastor. So in this example, what I'm going to do is I'm going to assume the church is paying 75% of the cost and the pastor is responsible for the other 25% of the premium. So the first method we're going to look at is the standard method. So if you were just going to set up QuickBooks online payroll, they would ask you for deductions and they would point it towards a liability. And I'm just going to call this liability payroll withholdings. So normally a liability is a debt, something that you pay. So let's go ahead and assume that we get the health insurance bill on June 20th and we pay it. So $2,000 comes out of our checking. And then we would normally expense this as the church's share, which is 75% or $1,500, and then the pastor's share, which is $500. And now here's the cruddy part about the standard method is that liability will show up as a negative on your balance sheet or statement of financial position. So that's an unusual thing, and it doesn't look right, and it just doesn't look right, but that's what it happens. So when you go to pay your pastor, let's say the wages are $1,800 per every twice a month, and then we'd have to withdraw that $250, and then the balance goes to checking. So you could see when I did that $250 for the payroll withholding for health insurance, our liability was cut in half. So if I was going to do that again, at the end of the month, you can see that the liability goes away. Everything looks correct. The only problem is that, guess what? We already have another health insurance bill. So by the time we get to the end of July, we have our negative liability. So you're going to always have that negative liability. Actually, it's going to look really bad before you get to the end of the month. It's going to be a negative $750. Anyway, that is what it is. So that's one way you can do that. So you can also map your payroll with deduction to hit your expense, your health insurance expense. And in this way, you could treat every time there's a payroll withholding from your pastor as a reimbursement of that expense. So when you go ahead and you pay the health insurance the first time, go ahead and expense the whole thing. So you record the whole expense at the time you pay it. And then whenever there is a paycheck, I'm just going to copy and paste this. You can see that it reimburses it, so it brings that expense down. And so by the end of the month, it brings it all the way down. Again, the only cruddy part to this one is you're going to have more, you're going to have another one hit. And the cruddiest part about this is you're paying for the next month. So if your pastor were to quit or pass away or drop coverage or something like that, after you've paid it, a lot of times you can get a refund for that expense or a refund for that payment. So if you were going to do that, normally that would show up as a prepaid expense. So I'm going to show you, this is probably my most recommended way. Go ahead and map your withholding similar to this one as an expense so that it hits health insurance expense. But when I pay it, I go ahead and I hit checking and I hit the prepaid expense because it's not an expense yet, but it will be in the month that we're paying for. So then you pay it, but you have to do a separate journal entry to reverse that prepaid expense. So I would go ahead and post this right away. Right when I pay it, I would go ahead and post it. And so right when we hit July 1, my health insurance expense goes to $2,000. My prepaid expense goes to $0 because now it is paid. It shows up as it's expensed properly. But whenever the pastor gets paid, we can see how that, maybe I didn't do everything correct here. Let me see. I actually should have had minus this. I must have been distracted. So anyway, that would bring down our health insurance expense. And then when we pay it again, that's exactly what's going to be recorded on your profit and loss or your statement of activities or income statement, whatever you want to call it. And when we actually pay it for July, again, it's a prepaid expense. So I must have missed this as well. Plus this. Oh, actually, no, I just did it backwards. That's my bad. There we go. So then when we pay it there, then it shows up as a prepaid expense. So this is all very, very accurate then. So this prepaid way is probably my preferred way, but it does take this extra journal entry right here. So this part here is going to be that journal entry. This part is probably this one is my least favorite just because you're going to have that negative liability and that'll get confusing. This one would be my second favorite, I guess, reimbursement one. The only issue with this one is you're going to record the expenses earlier than probably required, but I suppose that's fine, especially if you are a cash basis. That would make perfect sense to record the expense early on. So this would be more of the accrual method, and this would be the cash basis method. So hopefully that was helpful for you, and hopefully that helped you think through this situation. Whether you do the cash basis reimbursement one or you do the prepaid one, which is really the reimbursement through the accrual method, either way is a really good method and probably better than the standard method. What I'm also going to do, by the way, is include a link to how to map those payroll settings. There's good instructions from QuickBooks out there, and that'll help you know exactly how to map it versus a liability or an expense. All right, if you appreciated this, like, subscribe, share, comment, all that good stuff. And until next time, God bless you.